Welcome to Edison TV. I'm joined by Ewan Worthington, Chairman of DiamondCorp plc. Thanks for joining us. Now, obviously, from the name, you're a diamond producer, but can you tell us some more about where the company operates and the scale of it?
Yes, the company started in 2005 to effectively buy the old lace mine in the Free State province of South Africa. We now we own that 74% with our Black Empowerment partners, and that is our main asset. We have explored for diamonds in Botswana. That did not come up to our financial expectations. We want to build a business with other projects in Africa.
To the best of my knowledge, the lace mine was last mined in 1931. Now, if De Beers didn't touch it for so many years, what makes you think that you can make an economic success of it?
Well, if you cast your mind back to 1931, it was in the middle of the Great Depression when asset values were very depressed, including diamond prices. So we're nearly 100 years on from there. The diamond prices increased, like other commodity prices. We believe we have a very attractive mine with a very attractive margin at today's diamond prices.
How much geological confidence is there in the resource?
There is as much geological confidence as you can have with a diamondiferous kimberlite. We've drilled it, we've bulk sampled it, we've tested it, so we know that the grade increases at depth. The thing is, with a kimberlite, you can never be absolutely certain because the diamonds are dispersed throughout it on a random basis. So you can never take a kimberlite up to a proven reserve. The best you can take it to is a measured resource, and we will be doing that when we start the full underground development of the new block cave.
What's the company's business plan for the mine?
The business plan for the mine itself is to develop 3 block caves over the 25-year life of the known resource. The resource does go deeper, so the intention after 25 years, which is a time when I won't be chairman, be for new management to decide, we'll probably have a further block cave below the 880-metre level.
And what's DiamondCorp's strategy now going forward?
DiamondCorp's strategy is currently to develop the lace mine, but in addition we would like to diversify the risk and find other projects. We've looked at a number of projects worldwide, but with our size and our management team, we are really now focused on Africa. We know of a number of projects which are small to medium size that we have the expertise to develop.
How exactly is the company going to finance the mine?
In 2011, we planned to finance the mine through an equity issue. But having done a roadshow in Europe and London, the markets turned against us and our major shareholder wouldn't support the equity issue. So we failed there. We then looked around to see where we could finance the mine. And we saw that the banks in South Africa were less impacted with the financial crisis than those in the Western world. So we went to South Africa. We produced an independent engineer's report and we took that to the banks. So we got interest from the South African banks. And at the end of the day, the Industrial Development Corporation, the state-owned investment bank, came forward and offered us very attractive terms on the debt side. Yes, they insisted that we raise a further 100 million rand to support their debt package, and they were very conservative in that they applied a 30% contingency, whereas we had a 15% contingency. So we set out to raise the balance with a bond. Unfortunately, events at Marikana in August put a big block on that, and although the book had been filled in South Africa, by the end of August we were down to a matter of 40 million rand promised from South Africa. So we came back to London, and Tiffany effectively filled the gap we needed by putting a $6 million loan on the table in exchange for an offtake agreement. So with the IDC debt, the convertible loan and the Tiffany loan, we have fully financed the mine, including a 30% contingency.
Given recent events, does the company have any reservations about operating in South Africa?
We don't really have concerns at operating in the Free State, but we do certainly look at what is happening in the South African mining industry. And it was only last year that the shootings happened at Marikana as a number of bondholders were about to do due diligence. And that obviously set back our financing progress. So we are well aware of what is happening, but our mine is not on the platinum belt or the gold region, which employs thousands and thousands of miners. So we will only employ 300, 400 miners. And we don't anticipate problems, but we do recognise that working in South Africa has its challenges.
Now, your shares have been performing pretty badly recently, so what can you do to try and win back the confidence of the market?
It's not just our shares that are performing badly, but all shares of junior mining and exploration companies have been performing very badly for the last year or so. There is great concern that these small companies cannot finance themselves in the environment that we're in now, where investors don't want to take risks. Exploration companies are at the bottom of their shopping list. So we have to face that. We are very pleased that we financed the Lace mine. It was a very difficult task, but we did it. We did it with bonds, we did it with debt, and we did it with an offtake agreement with Tiffany. So we're fully financed and we're working on development of the mine. So all we can do as managers is do our best and hope that the public will wake up and recognise how cheap we are.
Ewan Worthington, Chairman of DiamondCorp PLC, thanks very much for joining us.
Thank you.